Hey, if you've been asked to create a balance sheet for your startup restaurant or your existing restaurant business and you're feeling just a little bit lost in how to do that, I'm going to show you in this video exactly how to create a balance sheet that actually balances for your restaurant business. I'm going to do that with our restaurant balance sheet template, and I'm going to link to this spreadsheet template in the description of this video below. But what I'm going to do in this video is just walk you through step by step how to fill out each cell and then how to get the balance sheet to actually balance. My name is Adam Hoeksema. I'm the co-founder of ProjectionHub, and we help entrepreneurs create financial projections when they're trying to raise money from investors or lenders or just internal planning. And specifically in this video, we're going to focus on restaurant balance sheets. So let's jump into the spreadsheet here. So the first thing you need to know is that every cell here in the spreadsheet that is highlighted in light blue is an assumption that you can change. And so we've got you'll want to put the current date that you're filling this out in this field right here, and then your company name. Got Adam's Restaurant. Now in this first section, you're just going to put how much cash you currently have in company bank accounts. So if you are being asked to create a balance sheet for a startup, what you might want to do is fill this out more as a projection. So what will your balance sheet look like once you get started? But if you're an existing restaurant and you already have cash in the bank, you already have equipment, and you're being asked to complete the balance sheet for the current date, I'm going to show you how to do that. So here you're just going to put in, let's say we've got $15,000 in the bank in checking or savings. And here, how much do your customers currently owe you? So this could be, let's say you're a caterer and you are able to invoice your customers and they pay you after the fact, or even before you've provided the food, perhaps they paid you, but you're waiting on those invoices to be paid. That's what you want to put in here. So let's say you've got some catering jobs and $10,000 outstanding in invoices that haven't been paid yet by your customers. And then next field, how much have you paid for inventory that you currently have on hand? So let's say we have $5,000 in inventory on hand. And then what dollar amount of expenses have you paid for upfront but you haven't used yet? So this could be things like deposits for rent, security deposits, or deposits for like utilities, that sort of thing. So let's say we have maybe $7,500 in deposits. And then do you have any other assets? Probably not. You probably aren't holding stocks or bonds on your balance sheet, so we'll just leave that at 0. Now here, we want to fill out how much did you pay for the kitchen equipment that you currently own. So this is all your ovens, refrigerators, freezers, mixers, slicers, grills, fryers, all that sort of stuff. Or if you are, maybe like a coffee shop type restaurant and you have espresso machines or coffee roasters, all of that kind of thing can go in this field. So let's say we spent $85,000. And then how much did you pay for the furniture and fixtures that you currently own? So that you'll have to remember what you paid for furniture, but you'll want to enter that in here. Let's say we paid $15,000 for that. I'm going to come back up here just to keep things a little simpler. Let's make that $5,000. Okay. How much did you pay for improvements in a space that you're leasing? So this could be things like if you're leasing a space and then you had to make some improvements to the kitchen, maybe to the electrical or HVAC, or you built out a bar area or had to build out restrooms, those sort of leasehold improvements. What you spent on that is what you want to enter here. So let's say we spent $25,000 on leasehold improvements. Now, if you own the land and the buildings that you, for your restaurant, that's what you'd want to put in this next field. Most restaurants are probably leasing space, so I'm going to leave that at 0. How much did you pay for any other fixed assets that you currently own? So anything else that doesn't fit into those categories, you can put in there. Most things are going to go ahead and fit into those existing categories, though. And then what dollar amount have your assets depreciated since you bought them? And so this is a little more complicated. You could talk to your accountant about what your depreciation should be. If you're an existing restaurant and you've had tax returns filled out, your accountant may have calculated depreciation for you already. And so you may want to have that conversation with the accountant to figure out what, to make sure that this number is accurate in terms of depreciation. Now, I know many of our users of this template probably haven't worked with a tax accountant, maybe don't know what the depreciation should be. And so there's a link here that you can learn a little bit more about depreciation and how to calculate that. But ultimately, let's just say we're going to add this up. If I add this up, we're at 125,000. So let's say we've had 25,000 worth of depreciation on this equipment. So its current value is worth 100,000. In these other asset sections, so we've left this in the balance sheet, although this is most likely going to be 0 for you. You're probably not going to have patents and trademarks and copyrights or goodwill on your balance sheet as a restaurant, unless you're maybe a large restaurant group, in which case you probably don't need a restaurant balance sheet template like this. So in almost all cases, these are going to be left at 0. But you can click to learn a little bit more about how to calculate on any longer term loans that you have. So this is a little bit confusing, but basically to have an accurate balance sheet, by the definition of the book here, your current liabilities would include the principal portion of loan payments that you plan to make or you expect to make in the next 12 months or that will be due in the next 12 months. So it can be a little tricky to calculate, but if you know you have a loan payment, you're paying $1,000 of principal each month, for example, then you would be able to put in, $12,000 is that annual amount that you would owe in the next 12 months because you're doing $1,000 a month for 12 months, right? So let's put that in there. Do you have any other bills or debts that aren't included above? So probably not. We're going to leave that at 0. And then long-term liabilities. So how much do you currently owe in loans to banks or other business lenders? This could be SBA loans, bank loans, different online lenders that you might owe. And here, let's say we have a $50,000 loan there. How much you currently own loans to owners of the business or other individuals. You could put that in here if you owe, family member $50,000, let's say. And then do you have any other long-term debt that wouldn't be, included above? So leave that at 0. Now, in the owner's equity section, how much has been invested into the business? So this would be whether you have outside investors or money you've invested personally into the business. Let's say you've invested 100,000, or maybe you invested 50 and someone else invested 50, but total we have 100,000 in investment. And then this is a little tricky too. What is the retained earnings? So cumulative profit. So the profit that you've made every year that you've been open as a restaurant, you need to add that up. So if you've been open 3 years and you've made $50,000 in profit each year, that means your retained earnings would be $150,000, for example. Let's just say this is $50,000. And then how much profit have you generated so far this year is what you want to put in this next field. Let's say that's 25,000. All right, so those are all the fields. Now, here's the trick. When you're filling in a balance sheet, if you have not been doing accounting and an accounting system like QuickBooks, which will help make sure that your balance sheet actually balances. When you fill this out, I can almost guarantee your balance sheet will not balance. And so let's just take a look real quick, this view button, and see what we see. So it brings us to the balance sheet tab, and it'll show you, based on the numbers that you input, what your balance sheet looks like. And when we get down to the bottom here, we see balance sheet does not balance. All right, so what did we do? For a balance sheet to balance, the equation is assets, your total assets needs to equal your total liabilities and equity. So here we're seeing that our total liabilities and equity is $335,000 based on the way we answered that. But up here we're saying our total assets is only $135,000. So what gives? Something is off, right? So most likely, what you're going to find is that your retained earnings could be one of the areas that's a mistake, and people will probably often use that as the plug number because you may not actually know how much profit you've made over the years, and that ends up being the plug number. Maybe you also find out invested capital was 100,000. Well, actually, maybe it wasn't really 100 because maybe you paid yourself back as a loan, and so it wasn't really invested. All we know here is that this is 335, this is 135. So we're $200,000 off based on these numbers. So here's what I'm going to do. I'm going to go back to the input data tab. And let's say, okay, well, yeah, we had invested 100,000, but we ended up paying ourselves back that 100,000. So this is actually zero. And the cumulative profit, maybe we're profitable this year, but yeah, when we look back at previous years, maybe we weren't profitable, especially in the startup year. So in fact, maybe our retained earnings is negative 75,000. Just put a negative in there, but we're to the good here, 25,000 so far this year. Now let's go back and look at our balance sheet. So we're at 110 and still that 135. So I'm still $25,000 off. So maybe I should say we're negative 50,000 is what I meant to say here. So now we go back to the balance sheet and we're balanced. So you can see it's tricky. That's why people use QuickBooks. Especially once you're an existing business and you have ongoing operations, it's going to be tough to create a balance sheet that balances. What I would recommend for you to do is do your very best to make sure that your asset numbers are correct and that your liability numbers are as correct as possible. You know, other areas where you might be off and what's causing you not to balance is that your depreciation. That's really a calculation. And so, you know, we picked 25,000, but again, that could be a question for your tax accountant. So lots of questions here about how to get a balance sheet to balance, but ultimately I want to show you what I would do if I were in your shoes and going through trying to get a balance sheet for a restaurant to provide to a lender or investor. So hopefully that's helpful. Again, encourage you to talk to your accountant if you have one, and also feel free to leave a comment in the chat or in the comment section below the video, and we'd be happy to try to answer questions for you there as well. Thank you.